Good morning, Miss Puffer. How are you doing this morning? Miss Puffer, can you hear me? Dr. Puffer. Dr. Puffer, can you hear me? I can see you now. I'm not quite hearing you. It says you're unmuted though, so I'll see if it's something on our end. But we'll be getting started in about 30 seconds. We'll see if we can get that worked out. Thank you.
We're all good. Good morning, everybody. I'd like to call this meeting of the Standing Committee on the Alberta Heritage Savings Trust Fund to order and welcome everyone in attendance. My name is Tanny Allen. I'm the MLA for Fort McMurray, Buffalo, and chair of this committee. I'd ask that members and guests at the table introduce themselves for the record, and I'll call on those joining in by video conference, and we shall begin to my right.
MLA Garth Roosevelt, Vermilion, Lloydminster, Wainwright.
Grant Hunter, Tabor Warner.
Ron Weeb, Grand Prairie Wapiti.
Eric Bouchard, Calgary Lougheed.
Justin Wright for the Charming Constituency of Cypress Medicine.
Abid Prakash, Chief Fiduciary Management Officer, AIMCO.
Stephen Thompson, Executive Director, Treasury Board and Finance, Capital Markets.
Brittany Jones, Director of Investment Strategy, Capital Markets, Treasury Board and Finance.
Tim Lamb, Auditor General's Office.
Kyle Kozowski, MLA for Sherwood Park.
Samir Kayande, Calgary Elbow.
Christina Steenbergen, LEO Communications.
Trafton Koenig, Parliamentary Council Office.
Good morning, Nancy Robert, Clerk of Journals and Committees.
Warren Huffman, Committee Clerk.
And we're going to go online. Mr. Dack.
Lauren Dack, MLA, Brampton, McLeod.
Thank you so much. Dr. Puffer. We still can't hear you. Can you log in and out maybe? While we're waiting for that, for the record, I'm going to note the following substitutions. We have Member Wright for Member Boychenko and Member Dack for Member Brar. We have a few housekeeping items to address before we turn to the business at hand. Please note that the microphones are operated by the Hansard staff. Committee proceedings are live streamed on the internet and broadcast on Alberta Assembly TV. The audio and video stream and transcripts of meetings can be accessed via the Legislative Assembly website. Those participating by video conference are encouraged to please turn on your camera while speaking and mute your microphone when not speaking. Members participating remotely who wish to be placed on a speaker list are asked to message the committee clerk, and those in the room should signal the chair or the committee clerk. And please set your cell phones and other devices to silent for the duration of the meeting. Dr. Puffer.
May I be heard?
Yes, we can hear you loud and clear. You're 5x5. Thank you so much for that. I guess we need to officially introduce herself. Yes, please. Could you just say your name for the record, please, Dr. Puffer?
Yes, Mark.
Thank you so much for that. And a draft agenda was made available to all members. Does anyone have any changes or additions to the draft agenda? If not, would someone like to make a motion to approve the agenda? MLA Hunter moves that the Standing Committee on the Alberta Heritage Savings Trust Fund approve the proposed agenda as distributed for its April 22nd, 2024 meeting. All in favor, please say aye. Aye. All opposed? On the phones, Mr. Dack, do you agree with us? Aye. Attaboy. Thank you so much. The motion is carried. All right, next we have the draft minutes from our January 30th, 2024 meeting. Do members have any errors or omissions they wish to note? And if not, would someone like to make a motion to approve the minutes? Mr. Rosewell moves that the Standing Committee on the Alberta Heritage Savings Trust Fund approve the minutes as distributed of its meeting held on January 30th, 2024. All in favor, please say aye. Aye. All opposed? Mr. Dack? Aye. Attaboy, that's twice. All right, the motion is carried. The Alberta Heritage Savings Trust Fund third quarter report for 2023-2024 was released on February 29th, 2024. Members were notified when the report was posted to the committee's internal website. As committee members will be aware, the Alberta Heritage Savings Trust Fund Act mandates that one of the functions of this committee is to receive and review quarterly reports on the operation and results of the Heritage Fund. We are pleased to have representatives from AIMCO and Treasury Board and Finance here to provide us with an overview of the report and answer any questions that members may have. I'm going to turn the floor over to AIMCO and Treasury Board and Finance. Please begin when you are ready.
Thank you, Mr. Chair. Good morning, committee members and guests. My name is Steve Thompson. I'm the Executive Director of Capital Markets at the Department of Treasury Board and Finance. I'm joined today by my colleague, Ms. Brittany Jones, who is our Director of Investment Strategy, and I'm here to present the results of the Alberta Heritage Savings Trust Fund for the third quarter of fiscal 2023-24 on behalf of the department. Over the quarter, the return of the fund net of fees was 3.1% compared to a benchmark return of 3.8%. The value of the fund increased by $654 million to $22.1 billion and established a new all-time high, rising from the prior high watermark of $21.6 billion set in June of 2023. Quarter-to-date and fiscal year-to-date returns share a similar story. Positive returns have been driven primarily by the public equity markets, while inflation-sensitive and alternative assets such as real estate have seen declines in performance. Fixed income yields have also been contributing positively to overall performance this fiscal year. Over the fiscal year to date, the return on the fund remained positive at 4.0% versus a benchmark return of 5.0%, a lag of the passive benchmark return of 100 basis points fiscal year to date. Despite the challenging conditions, the fund generated an additional $386 million over the quarter, bringing total income generated to date of $1.5 billion. This was mainly driven, as we say, by the performance of global equity markets. Over the longer term, the Heritage Fund has two main performance targets. The first is to outperform a real return target of the Canadian Consumer Price Index plus 450 basis points, and the other is to outperform a hypothetical passive benchmark by a margin of 100 basis points. Both are measured on a rolling 5-year period. Inflation has driven CPI plus benchmarks higher, and this impacts both the real return target and the passive benchmark. Alternative assets such as private equity, infrastructure, and renewable resources have seen their CPI target benchmark return expectations rise as inflation has persisted. The target has increased 81 basis points since March of 2021. The higher target translates to asset class benchmark returns that the asset manager, AIMCO, is expected to surpass over the long run. Currently, 31.4% of the portfolio is invested in asset classes that should theoretically help to diversify the portfolio returns throughout the market cycles, including those where inflation is a concern. Over 5 years, the fund has returned 6.5%. The passive benchmark returned 6.6% over the same time period, leading to an active management return of a negative 10 basis points, which is 110 basis points lower than the 1% target. At the reporting date, the CPI plus 450 basis point real return target was 7.0%. Over 5 years, this reflects a return 50 basis points lower than the real return target. Lastly, over the quarter, the fund incurred $49 million in expenses, $7 million higher than the same time last year. Fiscal year to date, the fund has incurred $124 million in expenses, which is 37.8% or $37 million higher than the investment expenses generated last year. This will conclude my prepared remarks on the third quarter results, and I will cede the floor to my colleague from AIMCO.
Thank you, Mr. Thompson. Good morning, Mr. Chair and committee members. Thank you for inviting my colleague, Dr. Buffer, and I to present to you this morning. My name is Amit Prakash, and as the Chief Fiduciary Management Officer at AIMCO, I have overall responsibility for managing our client relationships as well as advising on asset allocation decisions and other investment considerations for our clients. As part of my opening remarks, I'll touch upon 3 topics. So firstly, give you an update on one of the big initiatives we have undergoing, business transformation. Secondly, describe what we're doing on the people, and talent front, and then lastly, how we are executing on the corporate and investment strategy that was reviewed and refreshed roughly 2 years ago. But before I start with the prepared remarks, I also wanted to share with you the regrets that Evan Siddall, our CEO, sent to the committee. He was scheduled to be here this morning, but because of last-minute health reasons, he couldn't join us today. About a year, slightly over a year ago, we commenced on a review of our technology and operating platform with a view to make end-to-end improvements in terms of what we do and how we manage investment programs and pools on the platform. It was evident quite quickly that simply looking at technology in a narrow sense would be suboptimal, and in fact is one of the key reasons why many other organizations fail when they are trying to make these types of changes. So, and thus the description business transformation, because it's equally about better technology, but as much about better processes and ensuring that we're doing things in an integrated manner rather than a siloed manner. So we've been at it for about 1 year plus. A lot of it has gone into planning and making the assessments of what the platform would look like. And at this stage of the process, we are close to making a final selection, and would do so over the next month or so. Our clients will get a host of benefits from these changes. Not the least of it is we go internally from 100 plus systems to roughly 20 systems, which talk to each other more effectively than is the case right now. And then, and again, the benefits range from more robust, better reporting, better analytics, the potential to improve the returns that our strategies have, in that the teams are more focused on markets rather than cutting and pasting and doing manual chores. Two other aspects I think that is critical: the governance of this initiative, given its scope and size. In addition to the management team, the AIMCO board is overseeing it, including approving the budget, etc. And then lastly, we've spent a fair bit of time with clients, including our Treasury Board and Finance colleagues, to ensure that they have good line of sight and visibility into what these changes are, what the initiative is, and how we progress it over the last 12 months and over the next 2 or 3 years. And so we're excited that we're in that stage. We're excited that we're making this change that will make AIMCO a lot more effective and impactful and ready for the future relative to our current platform. Secondly, it's also very important, and another reason why these types of projects, initiatives fail at other institutions is not getting the organization ready for it. So change management is a critical part of it. People, the processes change, the systems change, the tools change. So it is important that the employees feel that that they're well supported through the change, and in many cases they need to pick up new skills, etc. So that's been a huge focus, including training, coaching, mentorship, and overall just helping with the transition. And then lastly, we did win an award as being one of the top employers of young people in the country. Again, really important. Talent is the life and blood of investment management, and so that was good acknowledgement by our youngest prospective employees to win that award. And then finally, we keep marching down the road in executing on our corporate and investment strategy. One aspect of it was to expand internationally. So now we have office both in New York and Singapore. Relatively small footprints of roughly 5 individuals each in both those, both physically in those offices. The one in Singapore is focusing on real assets, primarily infrastructure, and then beyond that, private equity. And the one in New York is focused on private debt and loan, and as well as building partnerships. And the latter is particularly useful. It allows us to punch above our weight in many cases, amplify our voice, and be able to get better information, better access to deals, and the part that we've seen already, better economics in terms of lower fees, which flows through to our clients directly. So with that, I'll conclude my remarks and send it back to you, Mr. Chair.
Thank you so much for your presentation. We'll now turn over to the question portion of the meeting. I'm going to open the floor to the committee members. Mr. Kende, please go ahead. Start us off.
For sure. Thank you. Thank you, Mr. Chair. I just want to tug on that thread a little bit about the lower fees from having these offices, because not only do you have a new office in Singapore, but there's an office, I believe, in the process of opening or already open in New York, primarily to do private credit, I believe, correct? And so, how do you think about the risk-reward trade-off from the fee standpoint? Because now what you're doing, I guess, is you're trading management fees for fixed operating expenses. And so can you talk a little bit more about that, about how you think about that trade-off?
Marlene, should I get started? You've gone mute again, by the way. Yeah, I'll get started. Yeah, so great question. So as we looked at, as we assessed that opportunity, it was really, really important to measure those kinds of things. But first and foremost is the value add, ultimately to our clients or not. And managing the cost and the scale is really important. And that's about 5 members. It's a small footprint. The second part is on the other side of the ledger is the scale on which these benefits apply. So let's say we're able to negotiate 5 basis points lower on a $2 billion or a $3 billion notional. That very quickly starts to pay for the office, and then some fairly quickly. And there are two sort of major categories of where those benefits accrue from, and sort of both ultimately are about better economics in this sense. So first and foremost, and the one I mentioned without mentioning specifics, is the ability to actually get overall lower fees by interacting with the investment managers in a more consolidated manner. So historically, our different teams, if you were speaking with the manager X on the public equity side, on fixed income side, on the FX side, and you did it through silos, the ability to actually do that on a singular basis allows us to negotiate better fees. So that's what we've started to see. At least there's one and perhaps 2 instances where that benefit applies, and it's the scale that makes it attractive. The second part, which we've able to do, and that there are more than 2 or 3 examples of that, is particularly on the private credit side, the ability to not only invest in pools, but also do co-investments or direct investments. What that does at the margin is those types of investments typically don't have a performance fee attached to them. And therefore the weighted average of the fees that we're paying, that tends to come down. And again, if it, even on a $100 million deal, it comes off by 5 basis point, that's quite material. Our private debt and loan book is roughly about $7 billion or so. So again, it'll be less than ideal to simply say 5 basis points times 7 billion. That would be improper. But over time, the idea is, to the extent we can move in that direction, that is what will pay for the office and then some. Marlene, anything to add to that?
No, you covered it very well, Annette, thank you.
The other thing, just for completeness, I mentioned the other part, other than the dollars and cents, it also allows you to get into the game more appropriately, and that is just getting access to deal. You want to be the first or the second call rather than the 10th call on transactions. And again, as our colleagues from Treasury Board and Finance are very aware, being in the markets themselves.
Yeah, may I ask a follow-up? So about that getting in the game, because I mean, $7 billion, it's certainly a significant amount of money, and at the same time, it's not the same as like what Blackstone Credit can bring to the table, for example. You know, I guess I get concerned when I see so many players moving into a space, like the risk of it getting crowded. Of course, like financial markets, you know, new financial trends tend to get crowded very quickly. You know, how are you thinking about the risk of that crowding, the risk of return compression? Because like what I see, and these are credit investments, and so you don't really know what they're going to do until we start seeing you know, the cycle turn. So how are you thinking about that specifically?
I could take that one a minute.
Yeah.
Yeah, it's a really great. Does that answer your question?
Yes, thank you.
All right, next we will go to Mr. Weeb.
Well, thank you, Mr. Chair. Thank you for being here and answering some questions. My questions will focus on the overall performance of the fund, and I'll start with the third quarter here. And so I'm just wondering which classes, asset classes have performed well over the last quarter and which ones have not. And then, yeah, and how, I guess, can you expand on the economic expectations for the year, and how do you forecast the fund going into the last quarter of this fiscal year.
Great, I'm happy to take that one. So the following asset classes really
Do you have follow-up, sir? Yes, I would also like to talk about, just the year-to-date, returns. It's 4%. It looks like it's 4%, is our rate of return, year-to-date, which is 1% below the benchmark. And similarly, the 5-year rate of return is 6.5%, which is 0.1% below the benchmark. Now, the benchmark, I believe, is a reasonable benchmark. Why is it that we don't see to be achieving to reach the benchmark? When I look at my own personal investments, these benchmarks are incredibly reasonable. So why can we not achieve that?
well, they are. answer your question?
Sort of.
Next, we have Mr. Kozowski.
Thanks very much. And thanks for the presentation and opening comments. The question, I just want to refer to the report and maybe just give me an education on the value of the fund. And so there's this fair value hierarchy. And so I got very excited about all the level 1 investments, but there aren't any level 1 investments, and there are all level 2 and level 3 investments in our fund. So just explain to me why this is amazing and why this is great.
Yeah, so great question. So we follow standard accounting, public sector accounting standards for our valuation and how we report Heritage Fund, and indeed all the rest of our clients in Alberta. The answer to your question, why is it more level 2 and level 3 and rather level 1? And just for context, there are different levels of securities that the accounting standards describe. The first one is if you bought RBC shares publicly available. The others, then there's a second category where it is less liquid and you have to look at comparables and you have models. And then you have when you buy bridges and airports, etc. So those are the three categories. So philosophically, the way we want to think about Heritage Fund, a pool of capital of 22 billion, the areas that it wants to play in are where typically the millions and millions are not playing, where you have relative advantage. So thus, we've spoken a lot about private credit this morning, but we have investments in infrastructure, you have investments in real estate. Even within equity, there's clearly parts of it which is in the more liquid public equity, but a lot of it is non-vanilla. And partly it is that the market, if you will, on average, compensates investors where you are actually stepping into parts of the market which is away from where, for example, a lot of the mutual funds apply. So there's a deliberate reason to be focusing the dollars in areas where you have potential to do better and earn that risk premium, if you will, in geek speak, relative to being in the markets, and that gets reflected in the accounting underlying the holdings of the Heritage Fund.
I'm good with that. And I think I saw earlier on there was about $6 billion in about maybe cash in the fund right now. Are we taking kind of a Warren Buffett approach? So we just got to sit to have that relative advantage in the marketplace, and you're not seeing the deal flow come through that is attractive for the fund?
Marlene, should I go?
Yes, go. You can start.
Yeah. Okay. So no. So by and large, most of for all of our clients, including Heritage, these strategies are these portfolios are fully invested. Where you typically see cash is when there are derivatives overlaying it. So if you have, for example, an equity future or a total return swap, so for $100 worth of exposure that you are getting through the derivative, there's approximately $100 worth of cash, and that cash is typically what you see in a portfolio, but it has market exposure.
Next, we will go to Mr. Hunter.
Thank you, Mr. Chair, and through you to the members for coming. I've got just a couple quick questions here. So we've got, when I've come to these, I've always asked about inflation and about the threat of inflation to our fund. And it's almost like you can see it coming, but because it's a big ship, it's tough to move it one way or the other. And you've said that before. So I'm going to ask this question again a little different, but so the federal government's policies, carbon tax increases, quantitative easing, debt increasing, are all contributors to inflation. And obviously the Bank of Canada has said that. They've actually indicated that. So I guess one of my questions is, how does the fund, or how does AIMCO hedge against these policies?
That's a great question. Does that make sense?
Yeah.
One more thing, one of the bits that helps portfolios such as Heritage is also on the public equity side, though typically it's not thought of as an inflation hedge in a way infrastructure or real estate is. But if you think about Air Canada's airfare going up or Amazon's charges going up, ultimately at least some portion of the inflation ends up showing as earnings, and therefore over the longer horizon that tends to be one of the slower moving aspects as well.
Yeah, certain segments of the equity markets.
Okay, so I do have another question. It's not really related to this, but so recently the Premier has indicated that we are going to push for $250 million in the Alberta Heritage Savings Trust Fund by 2050, up to billion, up to 400 billion. How does that play out in terms of our economies to scale, being able to get better returns if we were to actually get to those levels?
That's a really good question.
Mr. Kozowski.
Thanks very much, Mr. Chair, and appreciate the member for Tabor Warner bringing up that aspirational goal by the Premier, that 250 billion to 400 billion by 2050. And so I just appreciate Mr. Thompson provided last meeting the report about our non-renewable resource revenues and where that's been over the years. And so last year we were at the second highest amount of non-renewable resource revenue ever for us, I think 17 billion, and we were able to contribute to the Heritage Savings Trust Fund, I think about 2 billion, if I have that right. So if we get 2 billion a year for the next, I guess, 26 years, is it possible for you to come back with well, if you can comment on what we need to contribute in order to get to this 250 or 400 billion, or how do we model or plan to get this? Because it feels very aspirational. I love the vision.
Yes, there will be a detailed report released by the Premier's office. I believe her latest update was for fall of this year. That will detail exactly how we would plan to get to between 250 and 400 billion dollars by 2050, which, as you know, aligns with our net zero commitments of carbon neutrality. There is not a lot more detail I can provide at this time. There's a lot of work ongoing at the moment. We are working with some external consultants. We are modeling those numbers. I can tell you those numbers are realistic. They do envision varying levels of contribution or retention of assets in the fund, and that's why there's such a range of 250 to 400 billion. Obviously, that's 150 billion dollars is a large gap between the top and the bottom. But the details will be released publicly in the fall of this year.
Just so I heard you said they are realistic.
They are realistic, yes. They're based on return expectations that we believe are achievable.
Mr. Rosewell.
Thank you. I'm always intrigued by private equity and how we deal with that. And I understand, given what you said in Singapore, part of what they're focused on is private equity. I think I heard that right. And that real estate was a big part of that private equity component. So the last quarter, the returns haven't been as good as they've been in the past. And I know I've asked the question relative to how is it valued, and it's independent people out there doing their thing. So I just wondered if you can give us some of the reasons for the weaker performance in Q3 and what you're expecting going forward, or are we going through a time of kind of relative weakness of the private equity side, and what portion of the private equity is real estate, and is that why that problem is there? So start with that.
Yes, I could take that a bit. Private equity, I'm sorry.
That your Singapore office,
Yes.
like you mentioned,
So-
yeah, go ahead.
Yeah, so the Singapore
Thank you. So you mentioned, so interest rates going up was an issue. And, you know, the projection that they might fall going forward. Do you need a worldwide pattern towards that? Like if we started to reduce our rates because we were more in jeopardy, you talked about a slight chance of a Canadian recession, and that the Americans were well situated. So we may be more likely to reduce interest rates than say the Americans. And worldwide, if that's the case, if we reduce ours and they don't, you know, is that gonna stifle kind of your projections on what might happen?
Well,
Mr. Keonde.
Thank you, Mr. Chair. I'm gonna ask again about abandonments, which I believe I asked about 2 meetings ago, perhaps. I appreciate the exceptional response that I got regarding abandonment accounting, and my sense of it is that basically management has like an impression of what they're going to, what abandonments will cost, and so therefore that's kind of what the fund manager uses. The reason why I want to ask a little bit more about this is because there are credit investments, especially that are non-renewable resources that are subject to abandonment risk, and frankly, if we look at the example of something like Razor Energy, where there was a loan that went bad and then was closed out with a return of some assets, and then it files for bankruptcy, and then of course the bankruptcy court, the estate can look through all of those transactions, and then go after potentially lenders for the abandonment risk as well. Do you think about that when when you're doing some of these workouts, or when you're entering some of these deals, like what the potential for the abandonment risk being accepted by the Heritage Fund is?
Thank you for that. Thank you for that question, a detailed question, I should say. Two-part answer. So the first one is we will come back with a more detailed response. We had, I believe, presented a few months ago, but happy to refresh that. Secondly, more generally, we absolutely think about not only abandonment, but all aspects, the life cycle of any of the investments that we make in, and anywhere from a governance perspective to environmental perspective, and just the old-fashioned business review of a prospective investment. Sorry, I don't have any more details, but we'll follow up in a written response.
Yeah. And our focal point in the oil and gas sector.
Okay, thank you. I appreciate that. I guess my concern is that we have a head of government who has said that the taxpayer should support abandonment. And what I want to ensure is that the Heritage Savings Trust Fund is not in some way backdooring some of these acceptances of abandonment risk, especially after the Redwater decision, where we can the estate is liable for environmental liabilities first. And I'm just not sure that management disclosure of abandonment risk, which is probabilistic, is present valued, is actually reflective of abandonment risks that come due quickly, and it would give me a great deal of comfort to see what the abandonment exposed investments in the Heritage Fund are, to see if this is a big deal or not.
Happy to take that as a follow-up and provide a written response.
I would also like to see that.
Indeed.
Thank you so much for that. Mr. Bouchard.
So page 13 provides a breakdown of the fund's investment in debt securities as of the end of 2023 and separated by credit rating. The percentage of investment grade securities in the fund has gone down from 62.9% on March 31st to 60.3% on December 31st of 2023, while the percentage of speculative grade securities and unrated securities have both increased slightly over that same time period. My question, how are the decisions made regarding the amount of credit risk acceptable within the fund through debt securities?
Thank you. So
Thank you. Any follow-up? Were there any specific economic considerations that drove the change from March to December of 2023?
a little bit.
Secande.
So if we can jump back to that 250 to 400 billion dollars, so the analysis is yet to come, and so I'm wondering then how you know that it's an achievable goal.
That's a fair question. You know, as the committee is aware, we have conducted asset mix studies on the fund over the last year and a half, which provide different scenarios for investment into the future. And we have followed some of those scenarios to the track of 250 to 400 billion.
So what did some of those scenarios in which we hit 250 or 400 look like?
I can't speak to that today. That will be disclosed in the report from the Premier's office in the fall.
Okay, thank you.
Mr. Wright.
You, Mr. Chair, and through you to our folks at the end of the table here. On page 2, it notes that private infrastructure makes approximately 11.6% of the portfolio's assets, representing over 2.5 billion of market value. Can you elaborate and give some examples of these types of investments and what holdings would fall under this category? In addition, I also see that private infrastructure as an asset class has performed generally well over the last 10 years, with returns often around the 8.1% mark. Though there has been a slight decline over recent years, is there some specific strategies to determine what type of private infrastructure the funds are invested in?
Absolutely, happy to.
You know, I think you've handled the vast majority of that. And Mr. Chair, if I could ask just one follow-up
Absolutely.
question. There was a recent article that the Royal Bank, RBC Royal Bank, has put up in regards to Budget 22, and I just want to read one excerpt because I have a question about how this will impact our private infrastructure investments. And it says this budget, if passed, the capital gains tax inclusion rate will be set to change. The federal government's 2024 budget proposes a few modifications to how capital gains taxes will be impacted. Here's a rundown of the changes. For all corporations and trusts, the capital gain tax inclusion rate will increase to 66.67%, up from 50%. Now, would any of those direct changes of this proposed budget that's before our federal counterparts have long-term impacts on the returns that we'll see for these type of private infrastructures projects?
Certainly.
Do we have any other questions on the floor for our guests? Ms. Keonde.
Yeah, so I just want to tug on that thread a little bit about private equity, which is an excellent question, and from my colleagues across the way. I know that I just saw that there was that BCIMC, it's in the media, is thinking about selling some of its private equity stakes, and I'm just wondering because of as you know, there's like an overall issue of lack of liquidity, lack of deal flow that impacts exits. Are you seeing that as well? Are you concerned about it? Are you looking to be a seller into that market? Are you looking to be a buyer in that market?
Thank you. That's a really good question. Good activity.
One other aspect, sort of thinking about the public-private aspect, which has been quite interesting over the last, call it 10 years or so. If you look at the data of the IPOs or companies that are listed, particularly in the US, which is by far the most liquid capital market, that number has started to come down and has come down persistently. And think about Netflix, Tesla, etc., fully grown at 100 billion, what used to be 50 years ago, 25 years worth of growth on the public markets. So you're starting to see a lot of that type of activity happening in the private space rather than public. Does it change 10 years from now? time will tell, but certainly the direction of travel is a lot of that activity, those opportunities are in the private space.
That's really interesting because I didn't think about the correlation between secondary private markets and secondary venture capital markets, I guess. And so, what do you do with that? Like, I'm sorry, it's a very open-ended question, but it seems like everybody's been talking about this shift. It's very real. It means that the earliest stage, high growth companies are essentially inaccessible in public markets. Economic theory would say that should actually paradoxically increase the risk premium of trading in these things. And yet, now you're talking about very small illiquid stakes. How do you see the market reacting to that, I guess, is my question.
Right, and almost a flippant response. We quite shamelessly look at ways to make monies for our clients for Heritage Fund. So to the extent that this provides an opportunity through private equity rather than public equities, that's where we go, focus our energies and bandwidth, and then work with clients, to help guide to the extent that's helpful. And we're seeing this across the globe. So while most of the research published has been around the G7 markets, but clearly you're seeing that in India, you're seeing that other parts of Asia as well.
Before we continue, I just want members to know that we do have some other process that we have to go through. So this is final ask for any questions that we may have for our guests. Seeing none, thank you all for your presentation. We're now going to turn the question. Seeing no other questions, this concludes our discussion of the report. Thank you to our guests today from Treasury Board and Finance and AIMCO for being here today. You're welcome to leave the meeting now or remain if you wish. Thank you guys so much. Really appreciate that.
Thank you.
I'll now look to a member to move a motion to receive the funds 2023-2024 third quarter report. Mr. Hunter moves that the Standing Committee on the Alberta Heritage Savings Trust Fund receive the Alberta Heritage Savings Trust Fund 2023-24 third quarter report as distributed. 23-24 third quarter report. Yeah. All in favor, please say aye. All opposed? On the phones, Mr. Dack. Thank you, sir. That motion is carried. Honorable members, Section 6-4-C of the Alberta Heritage Savings Trust Fund Act requires the committee to report to the Legislative Assembly on whether the mission of the Heritage Fund is being fulfilled. The last report to the Assembly was made in March 2023, which covered the activities of the committee for the period from January 2022 to March 2023. The draft of this year's report was posted to the committee's internal website for members to review, and the report covers the activities of the committee during the 2023-2024 fiscal year. Do members have any questions or comments regarding the draft report of the committee? I'll now look to a member to move a motion to approve the draft report. Mr. Hunter moves that the Standing Committee on the Alberta Heritage Savings Trust Fund approve the committee's draft annual report of its activities during 2023-24 as distributed. All in favor, please say aye. Aye. Anyone opposed? On the phones, Mr. Dack?
Aye.
Thank you so much, sir. That motion is carried. Okay.
Mr. Chair?
Yes, sir.
Just a point of clarity. Are you not supposed to ask if there any discussion?
Yes.
Okay.
Is there any discussion?
Catch you on the next one.
All right. Someone's taking a peek at my notes here. All right. We need to discuss location and format. Under Section 6-4-D of the Alberta Heritage Savings Trust Fund Act, the committee is required to hold an annual public meeting to inform Albertans about the status of the fund. This meeting has traditionally been held in October before the start of the fall sitting of the Assembly. Following this practice, we would be looking at an evening meeting in October. However, we can decide on the specific date and time at our next committee meeting, which will take place in June. This meeting has been held in the committee rooms here on the second floor of the Queen Elizabeth II building since 2015. These rooms have all the technical requirements and support to host and broadcast a meeting with ample ability to accommodate any members of the public who attend. The committee could choose to hold the meeting off-site, but I think the best option would be to continue to use these committee rooms. I will open to the floor to any comments about this. Please discuss. Oh, a very robust discussion, I see. Thank you so much for that, Mr. Duck. We should also discuss the format for the meeting. The last public meeting of the committee was held on November 30th, 2023. Members of the public were able to ask questions in person by phoning in, by sending questions through email, social media, and a web form on the committee's website. These methods have been used for the past several public meetings that have been successful in encouraging public participation. I would suggest that the committee continue to use these methods to allow the public to engage and ask questions of the committee. I'll now open to the floor to a discussion of the format of the meeting and any suggestions on what members would like to do differently. Concerns, questions, comments?
Working so far.
Does appear to be working so far. I see that there's no other comments, and with that, we'll begin the planning process for this year's public meeting. We'll let all the hard work be done by the LAO staff. Everyone nods their head. Excellent. All right, and the communications plan. In years past, the committee has directed LAO Communication Services to prepare a communications plan in support of the public meeting. We have Rhonda Sorensen and Christina Steenbergen from LAO Communication Services joining us today, and I'd ask them to give an overview of what a plan might typically entail. Please go ahead.
Thank you, Mr. Chair. So just quickly, historically for this particular public meeting, we do use all forms of media that we can, so digital, print, and signage, just to get people to the building. Last year, because of the election, we were pretty tight for time, so we did utilize comms plans from the past. A large portion of the budget, which is usually about $40,000, has been put in print, on print ads, which reach about 500,000 people. That said, there's no way to actually track those print ads and how many people are actually coming to the meeting or coming to our website based on those print ads. So I would recommend perhaps moving some more of the budget into digital advertising. If the committee so desires, we'll continue with what we've been doing because it has been working. But we are certainly open to suggestions or recommendations from the committee for how they'd like to see things go. In addition to using social media for advertising, we do put out a news release. We have several no-cost options as well. So we'll create graphics and posts and e-cards that members can send out to their constituencies to let them know as well. And I think that covers it pretty quickly. We do tend to get a lot of engagement on our social media and digital platforms, especially in the meeting as well. So that includes Twitter, Facebook, Instagram, and YouTube as well.
Thank you so much for that. Is there any questions from the members to Ms. Steenbergen? Please go ahead, Mr. Hunter.
So I've been on this committee many years, except for when I was minister, but, so we spend $40,000. Most of the time, the same 6 people show up. That's the reality, and I enjoy their passion for this sort of thing, but except for last year, which was different. So I'm just wondering, you talk about there's no way of being able to identify whether it's successful or not. Well, I've been around for about 9 years now, and I can tell you that it hasn't really changed the needle. So I'm just wondering, for $40,000, I mean, it's $40,000. Do we need to do that in order to be able to actually increase it? It seemed like last year something was leaked to someone and they said something that wasn't really true, and then all of a sudden we had a lot of people come. Maybe we need to just go through the media and do a media story saying this is what Alberta Heritage Savings Trust is, and if you're interested, that's free advertising.
Absolutely. And I don't disagree with you. I think that putting more, $40,000 is a lot of money. What I'm saying is with the print advertising, because we're trying to push people to the website, right? So the Assembly website, so they can either watch live or just kind of understand a little bit more about it, because we do put some information online. But you're right, it is usually the same few people. We do put out a media release. We can certainly put more out, a little bit further out from the meeting. And we can target, if we wanted to boost our social media, we can target different audiences as well, if we want to try and engage a younger audience, or just put out some more educational posts to try and get people to understand what the meeting is for and why it matters. But we can certainly take that into consideration when we're developing the communications plan and come up with some options.
Member from Calgary, Elbow.
Thank you, Mr. Chair. I'd like to support the notion of spending directionally more on digital than on print. It seems, in my own efforts, certainly the Meta platforms and YouTube are like just absolute beasts, and it seems like a very cost-effective way to extend reach, and it may lead to some sort of a change in how that annual meeting is perceived and who shows up. So, great idea, thank you.
Thank you. So, of the 40, how much did print cost?
Mr. Chair. I'm just looking at last year's. So we spent $27,445.78 on print. So that did go to 81 communities, and like I said, reached about 512,000 people.
And we feel compelled to do that because we want to support those newspapers, other than just doing news releases that they could pick up, right, and put in as a report, right? But maybe they don't do that if we don't support them. Like others are, conflicting goals there, but.
So one thing is, a lot of the smaller papers unfortunately are publishing less and just going to digital. So you're right, there is a balance, because some of these more rural communities don't necessarily use social media as much, or they just kind of rely on their local papers. So we can also look at doing community newsletters, and we can also perhaps look into radio, but is also can be a significant cost, but it could also reach more people. The other option is, of the print, there was 12 of them that reached the Edmonton metropolitan region. So we could just limit the print advertising to closer to home, which might bring more people, would be the ones that would be more likely to come in person, would see those.
Any other concerns, questions for Ms. Steenbergen? Seeing none. Ms. Steenbergen, thank you so much for your participation today. Greatly appreciate that. I'll now look to a member to move a motion to direct the LAO to prepare a draft communications plan for review at our next meeting. Mr. Hunter moves that the Standing Committee on the Alberta Heritage Savings Trust Fund direct the Legislative Assembly Office to prepare a draft communications plan in support of the 2024 public meetings for review at an upcoming meeting of the committee. Any discussion on the motion? All in favor, please say aye. Aye. Anyone opposed? On the phone, Mr. Dack.
Aye.
Thank you so much, sir. That motion is carried. Are there any other issues for discussion today? Seeing none, the date of the next meeting will be in June after the release of the fund's annual report. And if there's nothing else for consideration today, I will call for a motion to adjourn today's meeting. Mr. Mr. Doug moves that the April 22nd, 2024 meeting of the Standing Committee on the Heritage Savings Trust Fund Committee be adjourned. All in favor, please say aye. Aye. On the phones. Aye. Thank you so much. That motion is carried. The meeting is adjourned. Thank you all so much.